While you could argue the index is put in a higher low, there's a mountain of evidence that suggests that lower prices could be in store. What's up, everyone? There's a lot to cover on the indexes today, so let's go ahead and get right into it. The Nasdaq finished the week lower as it continues to run into resistance at its 10-week moving average, which is this blue line here on the chart. Tuesday, we attempted to get above that line, but we had no luck and we actually closed below the 21 and the 8 exponential moving averages as well. Technically, we have this higher low from point A to point B, however, things are not looking good. Back on October 13th, we had the CPI data, which was also day 1 of our rally attempt. Then on the 27th, we staged a day 7 follow-through day. However, we quickly had a distribution day on just the 3rd day after that follow-through day. IBD research shows that when we get a distribution day that happens that fast after a follow-through day, there is a failure rate of 80%. That doesn't mean it's going to fail, but the odds aren't in our favor. So we can fast forward to Wednesday this week where we had the FOMC announcement, and I quickly want to flip to a 15-minute chart and dive into that. Okay, so here's a 15-minute chart of the Nasdaq. You can see that Wednesday's action was pretty tame up until the Fed announcement. At 2 p.m. Eastern, the Fed put out their statement saying they would raise interest rates another 0.75 basis points, but they would take into account economic and financial developments, as well as the lag with monetary policy that affects economic activity and inflation when determining the pace of the future increases. The possibility of future increases being milder sent the market racing higher. However, once Chairman Powell began his press conference, he made sure to squash any hope of a Fed pivot, stating that the terminal rate might be higher than previously thought. This reversed the initial rally and the markets closed at the lows of the day. Now, if we flip back to the daily chart, with that close, we undercut the follow-through day low as well as the June lows, which is this bright green line here. Thursday, as expected, after Wednesday's weak action, the market sold off more. And then today, we had the unemployment rate released, which came in slightly higher than expected, which is good news for the market. But you can see we rallied right up into this June low and we got rejected from there. So where we go from here is anyone's guess. However, there is substantial evidence that with the current macro backdrop, we could head lower. On the bright side, we haven't undercut the day 1 lows yet, meaning this rally attempt is still alive. We also have the midterm elections coming up and PCI data next week, which could reignite the rally. So let's go ahead now and look at some individual stocks that are holding up well and should be on your watch list. Okay, first up is going to be Enphase, ENPH. So this one formed a nice 7-week cup with handle base here. 7 weeks being the minimum length that we want to see for a proper cup and handle base. It's 28% deep, which is something I want to make note of because these previous pullbacks have been much greater than that. So it's finally tightening up and forming a proper base. You can see this first pullback here, close to 60%. The next one was about 42%. We did attempt to make a flat base here, however, it was only 4 weeks long, so it was a week short of the minimum requirement for a true flat base. But now we have a proper 7-week cup with handle base. It's nice to see the volume dry up in this handle, and also that we closed above the 10-week moving average. Okay, if we go ahead now and look at this on the daily chart, you can see that same cup with handle here. We had this earnings gap up, where we pushed higher back above all our moving averages. We came down, we undercut the low of the gap up day. However, we didn't fill this gap, so that's showing strength there. And again, we closed right above this 10-week moving average. So this is forming a very nice cup with handle base, one to have our eye on. The relative strength that this has been showing throughout this whole bear market has been incredible. Okay, moving on, Graphic Packaging Holding Company, GPK. This one's a serial baser. It based here, 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 and now we're basing yet again. However, this has a very symmetrical U-shaped cup with handle base. You can see the relative strength line pushing towards new highs, and we have this very nice volume bar as we come up the right side. We got a nice tight close this week on low volume as we make this handle. You can see the volume lower here. If we go ahead and push into the daily chart, here's that same structure, handle forming, haven't even come down and touched this 21 EMA. Something I like here is we had this volume increasing as we came up, had a nice earnings move, and then as we've come down and built this handle, you can see the volume just decreasing, which is exactly what you want to see. So there's not really any sellers in this presently. It's just being held down by the market as there's a lack of buyers. But this one is forming a very nice base, has great relative strength, it's above all of its moving averages, and they're all sloping in the right direction. Next up is Impinj, PI. This one formed a very nice double bottom base. We had a massive earnings gap last week, and we're consolidating those gains nicely. You can see we had a very massive run up here, 150% before we went on and formed this double bottom base. Okay, moving into the daily chart, you can see this same double bottom base here. This one also had a very nice multi-touch trend line coming across the tops there. It pushed above that line with that earnings gap. So here we are consolidating these gains. If this one can continue to tighten up, maybe come down, test this 21 EMA or form a mini coil, this would be one that I would be watching. However, this one is a little bit on the less liquid side. It does have some wide spreads. However, the relative strength in this price action with the current market environment, this needs to be on your watch list. Okay, Super Microcomputer, SMCI. This one broke out this week from a 10-week cup base. We have the relative strength line at new highs, signified by this green dot here. Massive volume on this breakout. It coincided with an earnings gap. If we go ahead and look at the daily chart, you can see that same cup. Here's our earnings report date and just a very nice move. That one was up over 12.5%, and that was the day that we had the FOMC. So the market was getting absolutely destroyed, and this held on to most of its gains. So if this one can consolidate a little bit more, maybe have this 8 EMA come up to this left side high and meet, that might be one where you could initiate a position, or if it wanted to come down more and tag this rising 21 EMA. This one has been showing incredible relative strength. It's at new all-time highs. It definitely needs to be watched, especially given the current environment and how weak the market has been. For a stock to be at an all-time high, that's showing incredible relative strength. Okay, last one for today is going to be Wingstop, WING. This one formed a quasi double bottom base here. I say quasi because it is 1 week short of the minimum requirement. It's only 6 weeks long, however, it does have the same shape. And this one has very nice volume characteristics. You can see nice above average volume on a lot of these blue bars. Moving into the daily chart, here's that same pattern. Again, just short of being a proper double bottom base, but once again, we had another earnings gap. This one's came up. It's holding its gains for the most part. It's above the left side high still. So this one's acting very well. It's got incredible relative strength, just like all the other stocks we've looked at today. This one can provide a nice low risk entry, maybe a mini coil or a tag of this 21 EMA. This could be something to buy or add to a position. So you haven't noticed, there's a common theme with all the stocks we've been looking at tonight, and that is that they all have a very powerful earnings gap up. Thanks for watching, and if you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button to stay up to date with all my latest videos.